What if I told you that to people with the same $10,000 in 2024 could have completely different financial outcomes by 2027? One choosing safety, the other choosing silver. The results will shock you. Welcome to what could be the most important investment presentation you'll watch this year. I'm about to share with you a tale of two choices, two paths that started exactly the same but ended in dramatically different places. Meet Sarah and Michael. Both are 35 years old, both are financially responsible, and both had exactly $10,000 to invest. But here's where their stories diverge. Sarah represents millions of Americans who choose the traditional path. She's conservative, risk-averse, and believes in the safety of traditional banking. The answer might surprise you, and it might change how you think about wealth preservation forever. She puts her $10,000 into a high-yield savings account earning 3% annually. It's safe, she tells herself, at least I won't lose money. Michael, on the other hand, represents a different mindset. This is about understanding fundamentals, recognizing opportunities, and making informed decisions based on compelling data. He's not reckless, but he's educated. He's spent time researching markets, understanding trends, and recognizing that sometimes the greatest risk is taking no risk at all. Michael takes his $10,000 and invests in physical silver, 15%, year after year. Why? Because silver isn't just a precious metal anymore. It has become absolutely critical to our modern world. A perfect storm that could potentially triple your investment by 2027. Meanwhile, investment demand is surging globally as institutions and smart money recognize what's coming. Every solar panel requires significant amounts of silver for optimal electrical conductivity. And with the global push toward renewable energy accelerating, this demand is only going to intensify. Now, before you judge either decision, let me ask you this. Which approach do you think will better serve them by 2027? Today, we're talking about silver, not just any commodity story, but a convergence of factors that have not occurred in over 40 years. But this isn't about get-rich-quick schemes or market speculation. So let me ask you a question. What would you do if you had a front-row seat to one of the greatest wealth preservation opportunities of our generation? Would you act or would you wait? But first, you need to understand why silver isn't just another commodity. You need to understand the fundamentals. What's happening in the silver market right now can only be described as a perfect storm, and I don't use that term lightly. Let's look at the numbers. Industrial demand for silver is growing at 15% annually. That's not a typo. The solar panel industry alone now consumes 20% of the entire global silver supply. But here's what most people do and realize. We're facing a supply deficit that is projected to continue through 2027 and beyond. Central bank policies worldwide are driving investors toward precious metals as a hedge against currency debasement and economic uncertainty. This isn't speculation, this is mathematical certainty. When you combine explosive industrial demand with constrained supply and surging investment interest, well, that's when extraordinary things happen to prices. Now we come to the projection that might seem incredible, but is based on solid fundamentals. Silver is currently trading around $36 per ounce. But multiple analysis models point to a potential price of $108 per ounce by 2027. That's a 200% increase in just 3 years. That sounds too good to be true, you might think. But let me give you the catalysts that make this not just possible, but probable. First, the green energy revolution is accelerating faster than anyone predicted. The silver requirements for this transition are staggering. Second, supply constraints are intensifying. New silver mine discoveries are at historic lows, and existing mines are facing rising costs and environmental challenges. Third, dollar devaluation concerns are mounting. When people lose confidence in paper currency, they turn to real assets. Fourth, institutional adoption is increasing. Major financial institutions are finally recognizing silver's unique position as both an industrial metal and a store of value. But here's the critical point. This isn't a 20-year window. Based on current market dynamics, the optimal entry point is closing. Every month of delay potentially means missing a larger portion of this move. So what does this mean for Sarah and Michael? Let's find out by 2027. The difference between Sarah's choice and Michael's choice is stark and sobering. Sarah's $10,000, safely tucked away in her savings account, grows to $10,300, a 3% gain over 3 years. At least I didn't lose money, she says, but did she really preserve her wealth? With inflation running higher than her returns, Sarah's purchasing power actually decreased. What $10,000 could buy in 2020 now requires $11,000 or more. She played it safe and lost. Michael's story is dramatically different. His $10,000 investment in silver, if our projections prove correct, becomes $30,000, a 200% gain. But more importantly, he preserved and multiplied his purchasing power in an era of currency debasement. This isn't about being lucky. This is about understanding market fundamentals and positioning accordingly. Michael didn't gamble. He educated himself and acted on compelling data. The question isn't whether you can afford to invest in silver. The question is, can you afford not to? But before you make any decisions, you need to understand the full picture. History doesn't wait for perfect timing. Every day of delay is potential opportunity lost. But silver's fundamentals have never been stronger than they are right now. So what are your next steps? First, research reputable silver dealers. Not all silver investments are created equal, and working with established, trustworthy dealers is crucial. Second, consider your portfolio allocation carefully. Most financial advisors recommend 5 to 15% of your portfolio in precious metals. This isn't about putting everything into silver, it's about smart diversification. Third, start with manageable amounts. You don't need to invest everything at once. Dollar cost averaging can help reduce timing risk while building your position. Focus on physical silver first, coins and bars that you can hold. This gives you direct ownership without counterparty risk. Remember, all investment involves risk. Do your research, understand what you're buying, and never invest more than you can afford to lose. But before you take any action, let me share with you the deeper story of silver, the historical context that makes today's opportunity so compelling. To understand where silver might be heading, we need to understand where it's been. Silver has a proven track record of explosive moves during times of economic uncertainty. In the 1970s, as inflation ravaged the economy, sound familiar? And confidence in paper currency waned, silver went from $1.50 per ounce to an incredible $48. That's a 3,100% gain. Each major bull market was preceded by similar conditions to what we see today. Not a typo, 3,100%. We have currency concerns, supply constraints, and explosive industrial demand. But this time, there's something different, something that could make this move even more dramatic. This isn't your grandfather's industrial demand. This is exponential, transformational change. From 2000 to 2011, silver surged from around $4 to $48 per ounce, and 1,100% gain as investors sought protection from financial market instability. Why? Because silver is the most electrically conductive element on Earth. There's simply no substitute for optimal performance. The peak came in 1980 when silver reached $50 per ounce amid economic turmoil, inflation fears, and currency debasement concerns. This one has a fundamental industrial backbone that's not going away, ever. Electric vehicles are driving silver demand up 300% by 2030. Every electric vehicle requires significantly more silver than traditional cars for wiring, charging infrastructure, and battery management systems. After a long bear market, silver again demonstrated its potential during the 2000s recovery. Here's the pattern. Silver responds dramatically to economic stress, currency concerns, and supply-demand imbalances. The current setup shows remarkable similarities to these past bull markets. That something is the new industrial revolution. We're living through a new industrial revolution, and silver sits at the absolute center of it. Solar panels now consume 20% of global silver production, and that percentage is growing rapidly. But solar is just the beginning. Then there's 5G infrastructure. The rollout of 5G networks globally requires massive amounts of silver for optimal signal transmission. This infrastructure build-out will continue for decades. Medical technology is another explosive growth area. Silver's antimicrobial properties make it essential for medical devices, especially as we advance into more sophisticated healthcare technologies. Here's what this means for investors. Unlike previous silver bull markets driven primarily by monetary concerns, the technology revolution isn't slowing down, it's accelerating, and every advancement requires more silver. But even with all this demand, there's an even bigger problem. While demand is exploding, the supply side tells an alarming story. We're facing what can only be called a supply crisis. Global mine production is declining, not growing slowly, declining. The easy-to-extract silver has been mined. What remains requires more capital, more time, and more complex extraction methods. Meanwhile, existing mines face rising costs and increasingly stringent environmental regulations. New silver discoveries are at historic lows. The great silver mines of the future simply aren't being found. Mining costs have increased dramatically over the past decade. Energy costs, labor costs, equipment costs, everything required to extract silver from the ground costs more today than ever before. Environmental regulations, while necessary for our planet, have made new mine development increasingly difficult and expensive. The permitting process alone can take decades. While some silver is recycled from electronic waste and other sources, the quantities are nowhere near sufficient to meet growing industrial and investment demand. Supply can't increase quickly enough to meet demand, so price must rise to balance the equation. Here's the mathematical reality: recycling cannot fill the demand gap. This creates a fundamental supply-demand imbalance that economics tells us can only be resolved through price increases. But understanding the opportunity is only the first step. You need to know how to act on it. Now that you understand the opportunity, let's discuss how to actually invest in silver. You have several options, each with distinct advantages and considerations. Physical silver, coins and bars, offers the purest exposure. These are excellent for portfolio allocation and can be bought and sold like stocks. However, you're trusting a third party to hold the actual silver. When you own physical silver, you own the actual metal, no counterparty risk, no management fees. This is ideal for long-term wealth preservation and forms the foundation of most silver investment strategies. Silver ETFs like SLV or SIVR provide easy market exposure without the need to store physical metal. Silver mining stocks offer leveraged exposure to silver prices. When silver prices rise, mining companies often see their profits multiply. This combines the benefits of physical ownership with retirement planning tax advantages. But remember, you're also taking on company-specific risks and mining industry challenges. These contracts offer significant leverage, but require sophisticated understanding and carry substantial risk. Real estate, stocks, bonds, and other assets each play important roles in a well-balanced portfolio. Silver futures are for more advanced traders who understand derivatives. Investment success requires emotional stability, which comes from investing responsibly. Short-term price movements can be volatile, but the fundamental trends we've discussed play out over years, not months. No investment is guaranteed, and responsible investing requires understanding and managing risk. This unprecedented monetary expansion historically leads to currency debasement and inflation. When the cost of money is artificially low, investors seek real assets that can't be printed or devalued by government policy. Silver, like gold, has served this role for thousands of years. This isn't about putting all your eggs in one basket, it's about intelligent diversification. Build your foundation with actual metal, then consider other vehicles as your knowledge and comfort level increase. It benefits from technological advancement and serves as a hedge against economic uncertainty. Silver IRAs allow you to hold physical precious metals in tax-advantaged retirement accounts. From Sarah and Michael's tale of two choices, to the fundamental drivers reshaping the silver market, to practical strategies for responsible investing, for most investors, starting with physical silver makes the most sense. But regardless of which vehicles you choose, proper risk management is essential. Let's talk about something crucial that many investment presentations skip: risk management. There comes a time when sufficient research must lead to informed action. Instead of investing a lump sum, consider building your position over time. History shows us they always do during times like these. The question is whether you'll participate or watch from the sidelines. This helps smooth out price volatility and reduces the impact of short-term market movements. First principle: portfolio allocation. Most financial advisors recommend no more than 5 to 15% of your total portfolio in precious metals. Dollar cost averaging can reduce timing risk. Diversification remains key. Don't just buy silver. Consider how it fits within your broader investment strategy. Think long-term. Silver investments should be viewed with a 3 to 5 year minimum time horizon. Most importantly, invest only what you can afford. Never borrow money to invest in precious metals. Never risk money you need for basic living expenses. These risk management principles become even more important when you understand the broader economic context driving silver's potential. To truly understand silver's potential, you need to see the bigger picture, the global economic forces that are creating this unique opportunity. Inflation concerns are mounting worldwide. Central banks have printed trillions of dollars, euros, yen, and other currencies. Central bank policies continue to favor quantitative easing and low interest rates. Geopolitical tensions are rising globally. Trade disputes, military conflicts, and political instability drive investors toward safe haven assets. Dollar weakness is becoming a recurring theme. As the world's reserve currency faces challenges from massive debt loads and political uncertainty, international investors increasingly seek alternatives. Economic uncertainty pervades global markets. Traditional investment strategies that worked in the past may not work in an environment of persistent inflation, currency debasement, and geopolitical instability. This is why silver's dual nature, both industrial metal and precious metal, makes it uniquely positioned. When you combine explosive industrial demand, constrained supply, and global economic uncertainty, silver emerges as one of the most compelling investment themes of our time. We've covered a lot of ground today. The opportunity is real, the fundamentals are compelling. The timing appears optimal, but remember, this is education, not advice. Every investor's situation is unique. Your next step is your own research. Verify what I've shared today. Understand your own risk tolerance and investment objectives, but don't research forever. Analysis paralysis has cost more investors more money than bad decisions. The question isn't whether another silver bull market will occur. Remember Sarah and Michael, same starting point, different choices, dramatically different outcomes. What will your choice be? Thank you for your time and attention. Here's to your investment, success, and financial security. If this helped you out, click the like button. Subscribe to the channel, drop a comment. Do you prefer physical silver or ETFs? Let's debate in the comments.